Hey, it's no surprise in the show, we love cash flow. But how do you cash flow more from business? That's what we're going to talk about today. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You work so freaking hard for that money, and you're now ready for that money to start working harder for you today. You don't want to have to wait 30 or 40 years from now. You want that cash flow, that freedom to become work optional now so you can do what you want with those you want, right? You want to be able to live that life that you love with those you love. But most importantly, it's not just about getting rich. It's about living a rich life because as you're blessed financially, as you grow your wealth, you now have a greater capacity to bless the lives of those around you. Thank you for tuning in today. You've been a blessing to my show and to me as well. Allow me to create this ripple effect through you. Thank you for tuning in. Of course, sharing this show, binging on these episodes like you've done so many times over the last 11 years. You've been such an amazing audience. Please share this with somebody else that you know, like, and care about. Somebody you want their life to be better. Go ahead and share this episode with them as well. Okay, today, we always talk about cash flow on this show, don't we? I mean, if it's not about passive income, it's about how do we have more cash flow and the importance of that. Well, I want to talk about that today, specifically cash flow. How does it work? Is debt good or bad? And by the way, what about with business? Like, how do we cash flow more in business and create more freedom there? Even if you're a W-2 employee, maybe you're looking to venture out and have a business in your portfolio. What do we do, right? How do we make that really work? How do we grow something that can actually create some freedom, both time freedom and money freedom for you? That's why we got Leo here with us, guys. So now, Leo, if you don't know who he is, he's the founder and CEO of the Seven Figures Funding, as well as the Seven Figures Club podcast. He also co-founded the My Figures cash flow platform, author of the best-selling book, The Business Funding Formula. So be sure you guys check that out. But again, he's served tens of thousands of people, be able to help them get funding and more cash flow in their businesses and in their lives today. So excited to have you here with us, Leo. Thanks for joining us.
Great to be here, Chris. Excited to connect with the audience. And like you said, cash flow is king. It sets everybody free. And, regardless whether you run a business or not, I mean, cash flow is affecting all of our lives, and the ability to track it is one of the challenges for so many people.
For sure. Well, I know you got your t-shirt on, right? What's that say? Fund your clients. What does that say?
Yeah, it says fund your clients, boost your sales. But then on the back, look at what the back says.
Cash flow sets you free.
There you go. So I just got back from Funnel Hacking Live in Vegas. And so we were talking to people about getting funding for their clients who wanted to start businesses. And then those same business owners were, how can I get more cash flow in my business? And so that's where our FinTech app comes in.
See, now I feel bad I didn't wear my own shirt because I actually have Money Ripples shirts as well. One of them is cash flow equals freedom. So there we go,
love
man.
it.
Like,
amen.
That's it. I'm taking the shirt off right now. Or no, just kidding. For everybody, like I just lost all of our audience just then. Like, no, don't do it. Right. So Leo, tell us more about you. Like, what was your journey like to get you where you are today?
Yeah, great question, Chris. So when I was in college, I started my first business, and it was this internship where this dude came in. He's like, "Hey, that piece of paper is not going to be worth much without experience. I'll teach you to start a house painting business." And I got started in that. I was knocking on doors and spring snow here in Utah, and got that business off the ground and ran it profitably, and took my wife and I on a honeymoon to Cancun. And I said, wow, I like this entrepreneurship thing where you can kind of control how much money that you can make by delivering a lot of value to people and taking care of your employees and marketing. And I'm like, this is for me. And so I got into that. Then I started doing mortgages and investing in real estate. And I was started getting arrogant, and I didn't read the books. I didn't invest in myself. The 0809 recession brought me to my knees. All those real estate investments, the mortgage company struggled incredibly. And so then I had to, start over. And as I started over, I'm like, maybe I should actually read those books. Maybe that there's something that, people more successful than me know. And I started reading the books. I started investing in myself, going to the seminars and buying the courses and learning about sales, learning about marketing leadership. And the one thing that everybody kept saying is, you've got to pick one niche, one industry, and then go all in and become the expert, become as good as you can at that space. And I thought, well, I've always been good at getting people financing. What if I help businesses get financing? So I started out with commercial real estate loans and did okay with those, but they took forever. And I realized that there was this massive need for new small business owners to get anywhere from 25 to $150,000 to get a business off the ground and growing. And there are tens of millions of them, and they're ignored by banks. And I said, I'll help those guys. And that's what we've done the last decade. And we love helping those small business owners, get access to money so that, as you say, they can get their money right. They can, get the freedom that they want and have a great family life because they have that freedom.
I can already guarantee you some of our faithful listeners right now are chuckling to themselves because they know part of my story where I was a financial advisor in the early 2000s, left that in 2006 to become a real estate investor while I was also doing mortgages on the side, got my butt kicked during the recession, just like you did.
Oh,
Went from
yeah.
millionaire to upside down millionaire, was over a million in debt, had to dig out of that hole and didn't become financially free till 2016, the second time, right? Didn't file for bankruptcy, but it would have been easier financially, at least from
Oh,
building
I
my
hear
credit
you.
score purpose. It would have been easier to file for bankruptcy than trying to dig out of all that debt hole, collections, judgments, and all that kind of stuff. But it's funny because I mean we're both in Utah, and by the way, just so you guys know, Leo and I have never met face to face. We were introduced virtually, even though we're probably within a half hour of each other. So it's kind of a small world happening here. And I read the books, just so you know, I read the books and I still lost the money.
Oh man, I didn't read any.
So see, there you go. Like education isn't everything, guys. That's the key, right?
No,
But
you're right. Like you got
implementing the
to
education's
implement it,
huge.
and experience certainly means a lot too. No question about it.
Yeah. Well, that's great. So tell us more about, I mean, like you said, you're helping people get funding. I can obviously see where a lot of this passion comes from in your life because you were in that place where having that lack of capital makes all the difference, right?
It
So
was, yeah.
yeah.
Yeah, no, I remember, after that, after the recession was going, and I'm like, hey, I've got some new business ideas. I'll just go to my bank where I've been for a decade and had loans, paid them off, kept all my money there. They'll give me a loan for a business. And they said no. And I'm like, wow, this is a lot more difficult than I thought. And so I tried to figure out what's the formula, what are the ways to qualify, what does your business need to do? Can a business without any sales get financing? If so, what does that take? And so I started to categorize and research and figure out what's the funding formula so that anybody who's looking for money can get money for their business. And I started to figure that out. And then I started to get financing for my business, for friends and family, and realized actually maybe that's the business I should be in. That's the problem that so many people need solved. And so that was when I decided to build a marketplace of options and let's serve as many small business owners as possible. And then there are a lot of people that work with business owners, right? Maybe
Mhm.
you're listening and you work with you have a marketing company or you do some accounting or whatever the case may be, and you work with business owners and you need them to succeed. And we started to partner up and help these business coaches and consultants and marketing companies by providing financing options for their clients. And one thing led to another. And now we've got over 10,000 referral partners who work with business owners that send in their clients every single month so that they can help more clients.
Well, I think this is a timely topic just because I've noticed just lately banks are quietly getting restrictive again. Like
Yeah.
for example, I was talking with PNC. I've had a good relationship with them, and they said, "Well, hey, we'll only give out lines of credit, business lines of credit, if you get rid of all of your other business lines of credit with other banks." I was like, "Wait, that wasn't always the case." They're like, "No, we actually honestly just changed this in the last year. We're just not really advertising it, but no, we require everybody to like get rid of all lines of credit but ours." And even then, like, we still want, at least for unsecured, for equipment loans, maybe we'll do something. But I know banks are getting a little bit more restrictive, but I know the money's still there. There's still money accessible. So how do people get to this cash?
Yeah, to be fundable, it starts with understanding your credit score, right? Even if you're a
Yeah.
business owner doing tens of millions of dollars a year, you're still going to need to have good credit for any type of financing for your business and personally. And they don't teach us. I've asked probably 100,000 business owners across the country, raise your hand if you learned a lot about credit in school. Nobody ever does. I think
Mhm.
maybe two or three out of 100,000 have said that they learned something in school about credit, but most don't. And that's the issue is they don't understand the system, and that's how you qualify for financing. So understanding your credit score, 35% is make your payment on time, and that's where most people think that's 80%, but it's just 35. 30%, the second biggest factor is how you manage credit card accounts. And so if your credit card accounts are all maxed out, then you look really bad to the credit bureaus and to lenders, and your score is going to be a lot lower. You get those credit card balances paid down below 45 or 30% of the limit. If it's a $10,000 card, get that balance down to 3 grand or 4,500 at the highest. Now you're going to have a much higher credit score. Your overall, what they call utilization rate, just how you use credit cards, is going to be lower. And now you're going to have a much higher likelihood of paying lower interest rates on your mortgage. You're going to get better insurance rates because your credit score is higher, because credit dominates everything. I
Mhm.
mean, even for the younger generation, or the generation who's looking for that romantic partner, if you're on Match.com or eHarmony or any of those spaces, like credit score is kind of front and center. Oh, you don't have good, well, this might be a deal breaker, right? And so
Nobody's asked
understanding
for your
that,
zodiac sign. They're like, no, no, what's your credit score?
yeah, what's your FICO score?
That's right.
And so understanding that, like that's where it starts is can we manage our personal credit? And then the second thing is what you've talked about already, cash flow, right?
Mhm.
If I'm looking for financing personally, am I, do I have a good debt to income ratio because I haven't taken out more credit than my income supports? And if I'm a business owner, how do I manage that business bank account? Am I taking out every last cent every month, or am I actually building the balance up? Am I avoiding negative balance days or bounce checks if anybody even writes checks anymore? But just, putting your business bank account in the negative, I mean, you'd be surprised how many people do that.
Mhm.
And I saw a business owner do it to the tune of $80,000. Like he literally put the bank account negative $80,000, and the bank charged him an arm and a leg in late fees and overdraft fees. And so it's having that extra money. That's how cash flow is, right? At the end of the month, when you paid all the personal and the business bills, is there a stack of cash there to grow and expand and invest in? If there's not, then that's where even people who make a lot of money might be poor because they spend all that money.
And they're looking at those average bank balances over months, right? I mean, it's not just
Yes.
bouncing checks or going to negative, even just
Yep.
keeping at least a certain minimum in there is something that I know is a big deal for banks.
Oh, yeah. Yep. It's all about the trend. Is your business trending up? Cool. You can have some money. If it's trending down, sorry.
Right. If you look like you need the money, that's when they never want to give it to you, right?
Exactly. So you want it. So the key here is to always have access to revolving credit, right? If you have access, and that's what you're talking about, right, Chris? You're like, hey, let's have lines of credit available for the business in case of opportunity or emergency. We have, that runway that we can tap into if we need to.
Yeah. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Now, I know from my own personal experience, I have like an 840 credit score across the three bureaus, and even then, like they're still going to be like asking you to kind of financially pull your pants down to look at everything, like they want to know it all, don't they? And and so I know like things are definitely shifting and changing. What do you think about that debate? Because I know there's when you talk about getting fundable, especially as a business, some banks will say, hey, you get those banking relationships, and then they give you those lines of credit, even revolving lines of credit, while other people do like the credit card stacking and things like that. I mean, what's your opinion on just getting like banks lines of credit versus doing credit card stacking, where you're like transferring balances, trying to move them back and forth? What's your opinion on that?
Yeah, well, the pros with credit card stacking is you get that 0% introductory rate for generally 12 to 15 months. So the line of credit you're going to be paying an interest rate at the beginning, But the bottom line is for if you're starting a new business, you're a small business owner, it's going to be much more difficult for you to qualify for that line of credit. And
Hmm.
so 0% or business credit cards is a good place to start. And you want to get those in the name of the business that don't report personally. And a lot of the times they have a 0% introductory rate. And the cool thing is, you can start out with a limit as small as five, $10,000. If you take good care of it, you could build it up to $100,000 limit in the name of your business, not reporting to personal credit. And then the other pro that I would say the credit card has versus the line of credit is I'll use my business credit card to pay as many expenses as possible on a monthly basis. Because then at the end of the year, I'll literally have $10,000 in actual cash back. And I always ask everybody when I present on stage, is this real money or is this just
Hmm.
I can go get a pan or a spatula with it? If you do it with the right lender, it's actual cash money. And I'll take my family of five kids, my wife and I will go to Disney World, and those cashback rewards will pay for it. And so it's just understanding this game. It is a game of how finance and cash flow works and then putting those odds in your favor. So there's pros and cons to both. One of the big pros about a line of credit is it's easier to access cash if you
Hmm.
need to pay cash for something and they won't accept a card. But
Right.
even then, there are certain firms out there now that will help you liquidate off of a card and send it right back to your bank account. And so there's solutions in both places. And at the end of the day, as a business owner, I want to have both. I want to have access
Hmm.
to both so I have more options, but I want to be very smart and follow Damon John, proof of concept. There has to be proof of concept. I'm not putting any money into something that isn't proven, including a marketing campaign. I'm going to start out very conservative. One of the biggest mistakes that a new business owner will make is they'll get some money and then someone will talk them into, investing it all in some marketing campaign that goes nowhere.
So what's your opinion on this? When it comes to people looking at, getting debt, some people are kind of like debt averse. They don't want to have debt. So they're looking at it as like, maybe I'll just bootstrap it versus though they're willing to finance. I mean, what is your opinion? Like, when is it good to have debt? When is it not good to have debt?
Such a good question. And from a personal consumer standpoint, I mean, everything is about debt. It's so easy, right? You look at our government and how the government spends money, and the US government is in debt $36 trillion dollars and yet brings in trillions of dollars every year. And the budget that we had in 2019, we actually make enough revenues now. The economy got a little bit bigger that it would cover all of that budget. But we did we're poor. We just keep on expanding the budget so that we
Right.
always spend more than we earn. And that's what the average consumer does is buy now, pay later,
Mhm.
finance it, use Klarna, all these little Affirm, all these little finance things. And the only personal debt you want to have, and there was a church leader here in Utah who was very famous about this, and he's like, hey, you should have a mortgage and maybe in one or two, maybe one auto loan, and that's it. You can use credit cards to pay for stuff, but you pay them off at the end of every month and you get those free cashback rewards. That's what we do. But beyond that, you really shouldn't be using debt for personal reasons. But then what happens is, for the majority of the population, that's the right way to live. And but if you're going to be an entrepreneur and a business owner, for example, Kevin Plank, when he started Under Armour, he saved up 20 grand and that wasn't enough. Then he went
Mhm.
and got $40,000 in credit cards. And now Under Armour is the number two sports apparel brand in the world because he knew he had a viable product. He had proof of concept. And so when you have a business model and a product or service that the market likes, then it's okay to go into debt for that because you're going to invest in a business that makes more than enough money to not only pay that debt off, but then to increase your income. And if you hadn't, you would not have been able to grow that business. It's the same concept that a tech company like a Google, Facebook, Instagram would have done is they got all this investor capital. They weren't profitable, but they had a proven product. And as they grew and scaled that, eventually they became enormously profitable. And even that model's changed a lot over the last 2 years because tech companies you know, over simplified it said that they were going to be profitable and they never were and they were just burning money. But
Right.
if you have a proof of concept, as Damon John from Shark Tank would say, your product or service is profitable, there is a demand for it in the marketplace, then it makes sense to take out debt for that. That's good debt, it builds, but debt for personal reasons generally bad.
Yeah. it's all about stewardship. It's kind of what we talk about in the show, right?
A
It's like how good, how
100%.
wise of a steward can you be with the money you're given? If you're going to blow it, if you're going to screw it up, then don't do it. If you're going to gamble it, spend it, don't do it. But if you can use it to actually create more, like I think of like the first SBA loan I ever got was actually in 2007, right?
Yeah. Oh
Before
yeah.
everything tanked. I remember getting that first SBA loan and they gave me 25 grand, but I remember that monthly payment was like 130 bucks a month. And all I could think was, if I, as a business owner, can't make at least $130 a month from my 25 grand, I shouldn't be in business, right? Like
Yep.
that should be a no-brainer.
Yeah, it's exactly what it is. And it's this concept in my book I call ROL, return on loan, return on line of
Mm,
credit, right? If I go out and I finance, really expensive vacation or some expensive clothes, or I get this really expensive car, is that going to make me money? No, generally not. It's just, I'm just going to be putting more money into that. And if I'm paying an interest rate on it, I'm losing. I'm not generating any return. There's no expectation of a greater return. My partner Ty always talks about this, but if I take out financing for a business, there's an expectation of a return.
mhm,
And as you said, if my return is bigger than my monthly payment, than my interest rate, then I'm going to win big. And usually as a business, you can buy something for $1 and turn it into $3 or $4 as a
yeah.
business owner. And that's just something you can't quite do so easily as a consumer. And so that's where even if it costs me 10, 20 cents on the dollar, 10 to 20% interest, but I'm making 2 or 300% on the money in a
Mhm,
12-month period of time to build my business and sell my products and services and invest in marketing and a team. Well, that's how I win. That's how I grow and scale exponentially. And that's why so many of the wealthy understand this difference, right? They use debt to build businesses. They might use it to buy real estate. They might use it to invest and grow their business, and they don't use it necessarily for personal reasons.
exactly. Now, obviously, I know there's a lot of business owners here that are looking to get funding, even some people that want to own a business, even if it's not something they have to start, right? They want to get funding,
Oh,
whether they're
yeah.
starting a franchise or an existing business. What's the best way for them to follow you, reach out to you to be able to get access to this, or even your book? What's the best way they can do that?
Yeah, yeah, they can get access to a bunch of free resources at sevenfigures.com. That's just the digit seven and then figures.com. And they can get a free pre-approval. The number one question people ask is, okay, sounds good, but is this going to negatively impact my credit? Well, the truth is,
Right.
if you go down the street to your local bank and you apply for financing just to see what your options are, they're going to ding your credit with a hard credit pull. They're still using archaic systems. We are approved with Experian soft credit check program. So Experian came and investigated our office and said it was secure. And so you can get a free snapshot and a free pre-approval with no negative impact to your credit and get an idea. Well, here's my options and here's what I can qualify for in the future. Or, oh, I'm going through this credit thing right now. Here's a step I can take to become more fundable. And so you can do that by just going to sevenfigures.com. And then, like I said, we have resources. Everybody that applies for financing, we give them free access to Credit College, since no one taught us about credit money. And we
Mhm.
do give everybody a free digital copy of the Business Funding Formula book as well.
Awesome. Well, guys, we'll be sure to put that in show notes for the sevenfigures.com link, but definitely go check that out. I mean, even if you're considering maybe getting some funding in the future, that would be a awesome, awesome opportunity. Well, last question for you, Leo. And this obviously it's the Money Ripples podcast. We talk about that ripple effect you can create through people's
Oh, yeah.
lives, and that sort of thing. What do you feel is your ripple effect in the world today?
Yeah, my ripple effect, and it's interesting you asked this. I had a gentleman on who's had multiple exits of businesses. And the one thing that he talked about that was congruent, the common denominator of all of these businesses, is they had it down to such a detail of who their dream client was, their dream avatar they were serving.
Hmm.
Like it was, this 39-year-old man with two kids who
Hmm.
went to these stores and he had these interests and was in this demographic. Like they knew down to such a granular level of who they were serving, and that's what made them so successful. And then they attracted that person and they attracted other people that wanted to be like that person, and that's what made their business so exitable and so valuable. And so as I've been in this space for the last decade, that's what I've my thought has been, you know what? I want to serve my imaginary avatar is a guy named Bob, and Bob's 35 years old, and he does have 2 to 3 kids. and he's looking for freedom for his family. He wants to earn more, and he's starting a business, and he needs resources and tools and education and financing to make that happen. And so my mission is, how can I get that money in Bob's hands? How can I give him the right software tools so that he can succeed and be successful in his business, have cash flow, create an epic life for him and his family. And then that's even grown beyond that. In the last few months, we said, well, man, it's going to take thousands of employees to really serve that mission. So I said, well, what if we license out our entire funding system and help all these other loan brokers to be able to do a better job of that? And then we can help more Bobs. And so
Right.
that's been for me, is how can I help Bob, that business owner, get that money, get the tools, get the strategies so he can succeed.
I like it. Bob the business builder, not, or sorry, business owner, not Bob the builder. There you go.
And Bob could be a builder and a business owner.
That's true. He could be both. He could be contractor for all we know, right?
Yeah, for
So,
sure.
well, Leo, appreciate your time here on our show today. That's great. Everybody, again, check out the show notes there, sevenfigures.com. Definitely great resources for you guys to be able to use and consume for yourself and see what kind of ripple effect Leo can create in your own life as well. So, everybody, remember, it's you can listen to this all day, but don't be a hero of the word, be a doer as well. Make it a wonderful and prosperous week. See you later.